Good evening all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 6th of July, 2021, and we're about 6:25 p.m. Central Time. And what a confusing day. You know, how do you make out what's going on with everything in the world? You know, you can look at the crude. Is it bullish or bearish, the fact that OPEC Plus has not made a deal? One part can say, okay, they're not going to pump more oil. Really? The market rethought that today and said, well, what if a free-for-all happens? There's no deal. Maybe there's no binding to what was already agreed on. I'm not in that camp, but anything can happen, so why do you get involved in that? Then the market is super confused with what's going on and interest rates falling. We saw jobless data. Is it strong enough? Too weak? What does it mean for the market? Well, the stock market went up to another set of highs, but gave them up today as traders started getting nervous about it. Metal markets tried a big rally, couldn't hold it. So let's go to the chart action. For the week, we're down 1/3 of a point, nothing big, and that's off an all-time high close that we had last week. If you take a look at this chart, we have an outside day down. That means you took out Friday's high, low, closed lower. If you take out that high, it's a bear trap, and you normally go up to either the closest moving average above it or a Bollinger Band. So where are the moving averages? We'll get to them in a minute. In terms of the swing lines, it's bullish. You have a pattern of higher lows, higher highs. Remember what a swing line is. We'll talk about that tomorrow before I get too far here in this meeting. I'd like to stop you right at a certain spot. Remember, I'm going to have my What's Up, and that's going to be our live webinar. I'll open it at 12:15 tomorrow. If you didn't get an invite from me, you're probably not going to get one. Just click up here. You see this icon right up in this area? Click on it. When you see that icon, that's what you fill out everything. You'll then be given your password, your user ID, the link to get in, and away you go. Bring your questions. You can write them to me ahead of time at I Epstein, that's I Epstein at Linn, that's Linn, LLC.com. We'll put that up on one of these, so when I'm running these instead of my other parts, you can see that. Let's get back to the chart. So there are 5 steps to make a swing line. Do you have a higher high, a lower low day, an inside trading day, an outside day up or down? Each one of those rules, the system picks up that I created, and that's what gives you these valley breaks and the peaks. When you've got higher lows, higher highs, you're bullish until you take out now 42.69 1/4. The market is trading over the 18-day average, which is over the 100, which is over the 200, so I don't have any main moving averages above me. I started off by saying we had an outside day down, and if you take out the high of an outside day down, you often go to the closest above the market of a moving average. I don't have any. So it'd be the Bollinger Band, and that's right here, and that number would be 43.56. On pullbacks in the market, I'm looking for support at the 42.60 area. What about slow stochastics? They're embedded. So until the red line closes under 79, I think that on pullbacks in the market, you're going to see fairly aggressive buying from those of you that are still bullish and new traders that want to be bullish. Lose that reading, and then I think you're going back to the 42.60 area. NASDAQ, not similar. Higher high close, all-time high close, embedded reading. The breaks were in here. For those of you that took my enhanced Bollinger Band course, you've had opportunities if you wanted them. It's still bullish. The Dow, higher lows, higher highs, outside day down. Is the market embedded? Well, you cannot count tonight because we don't know where it'll finish for Wednesday. So you go to Tuesday, both numbers were over 80. The day before they're over 80, but not the day before. Tomorrow's the big day, so we'll get an idea if the market going to embed or not, and that gets me aggressive, bullish or bearish in the market. In the Russell, this has been in a downtrend with today's action. What number did you hit? The lower Bollinger Band. When you first hit a lower Bollinger Band or an upper one, I teach that that's where I think you take money off the table. Can you take the whole position? Everybody's got their trading technique. Take my enhanced course, and it explains it there. So I think the pros took their money. I think that they'll be looking possibly at resales at the 18-day average at the 2271 level, I'll call that. And you don't want prices back over the highs of Friday. And that high in the downtrend was 2346.70. That would be the stop out on the position. But I do think pro money's been taking money off the table. In the VIX, you're back up and fighting at the 18-day average and basically sideways action. In the bond market, this has got to be the surprise to traders. First, you're very overbought. You closed over the upper Bollinger Band again, which means it's like a rubber band. You're pulling it. The odds of staying over it aren't real strong. But you've also got the FOMC meeting tomorrow, and traders will be doing their tea leaf thing. Every word gets scrutinized as to what the Fed may or may not be saying. 5-year notes the same, but again, not embedded. I think the pros took money off the table today. Dollar index, uptrend until today's lows taken out, but even that wouldn't necessarily break it. You have to lose the embedded reading under 79 for me to think that that's lost. Possible target, way up here at 93.12 area. In the eurocurrency, here we are at 118.37.5. I think the pros were sellers today as the market had a good rally with an embedded reading already in place. And I think they're looking for the possibility of either the Bollinger Band, there'll be a window envelope. They'll probably pay close attention to that in front of it. In the British pound, the market is what? Well, I want you to walk with me through it. Not tonight. Let's go back a few days. So you have markets that have not both numbers under 20. Here they are. Here they are. That's on Friday. This was Tuesday. So you got your embedded reading through it, and you don't know where you're at today. Be careful. Any close over 21 today will knock the bears out of the market. Resistance right through here. Objective, if it can continue to break, in between the lower Bollinger Band, and if you take my charting course, there'll be a window envelope that I'll have in my subscriber videos for you. Bitcoin's got a lower low, higher high, and a battleground of the 18-day average of closes. Very difficult to make heads or tails out of that. As you can see, the differential between Brent and WTI oil, well, you got to 150 on Friday. You're back up here to 195. I'd say to you, and I did say, I think the market's going to have resistance at the upper Bollinger Band. You tell me what you're seeing. You don't have an embedded reading. I think the pros took their money off the table. I think the pros stepped away from all this today. Right here on Friday, when you open lower today, you got a problem here. You first went up, and then when you turned down, you lost your embedded reading, and it's staying lost. I think the professional money walked away from the upside today. Gasoline just overbought up to the upper Bollinger Band for the past 3 days. You know what I teach. I don't think it's going to make it through it. Boom. So you put that together. We'll talk about it tomorrow at the live What's Up chat room. I'll look for you all at 12:15. Just click here. See you tomorrow.